Math is for special people. No, there's no such thing. You can teach anybody math as long as the student is willing to learn math. If I could afford the pay cuts, actually, my dream job would be a middle school math teacher because you get them before they get all these bad habits. Students are more interested in memorizing stuff, and I always get questions from students. I mean, I understand the question, but I don't know which formula to use. You don't need to use formula. Sometimes you're gonna figure out the formula, or just set it up as a problem where something is unknown, and you let Excel to do it for you. I mean, I could even do it for my. I'll use this in a different setup, but we can use our solver template. Just set it up that way and let the Excel do it for you. All right. Uh, You'll learn a lot more when you watch those videos because I don't want to spend more than 2 lectures on financial statements. Why? Because A, you have or should have seen these things in your accounting classes. And two, I have, let me see how many problems uh, I posted on this chapter. I mean, I have 21 problems where I go through all sorts of, you know, different problems and go through the solution both algebraically on the video in Excel and that sort of stuff. Time in classroom should be spent more on trying to give you the relationship between concepts than problem solving, because those I can do outside of the class, and I can do a lot more. Even if I spend 4 lectures on these, the time that you can spend on individual problems is relatively limited. All right, let's talk about the concepts of cash flow. Oh, by the way, uh, if you want to know the depreciation amounts, you're going to have to look at the statements of cash flow. And you have, for example, for Apple, that amount is about $11 billion. You're not going to see that in most cases in the income statement, even though technically it is part of the cost of revenue. But in exercises we do, we always make a distinction between costs and depreciation. How's the market doing today? It's up a little bit. And because of NVIDIA, it's down, but it was up earlier on. That's a company that makes high-speed memory chips to use in AI chips. The cash flow concept we use is not the cash flow concepts used in accounting. Uh, we're going to call that oops, cash flow from assets, CFFA. This is sometimes known as the free cash flow. It's a quantity that tells you how much cash the firm has produced that will be distributed to shareholders and creditors. Okay. There are two ways we can calculate CFFA. One is the direct calculation, and that's equal to operating cash flow minus net capital spending minus change in net working capital. We're going to define all of these. So this is NCS. OCF, take the net income, add depreciation, and net interest expense. So how much cash you generated on an after-tax basis for your company. Now, this kind of the reason we add depreciation by itself, it's not a cash expense. But depreciation also allows you to, everything else being the same, if a company has higher depreciation, it also has higher operating cash flow. Why? Because not all of that, some of that depreciation is used to reduce your taxes. If you think about your net income, EBIT minus depreciation, I'm sorry, times 1 minus tax rate, or that's equal to EBIT times 1 minus tax rate minus depreciation plus depreciations times tax rate. Come on. So if I add depreciation back to net income, the first depreciation is canceled. It's basically after tax EBIT plus depreciation times tax rate. This amount so, this is also known as depreciation tax shields. To what extent your taxes are reduced because you have depreciation. We have a lot of different legal methods to calculate depreciation. Obviously, companies use the one that's going to generate the most tax shield. So if I ask you, everything else being same, depreciation increased, What happened to the operating cash flow? Your answer is going to be what? Went up, down, or stayed the same? It went up because it increases the depreciation tax shield. Okay. So-called net capital spending is change in net fixed assets plus depreciation. Or this would be purchases of new fixed assets minus sales of existing fixed assets at book value plus depreciation. And that's it. That's net capital spending. For a firm that doesn't buy or sell any new fixed assets or existing fixed assets, net capital spending should be zero, right? Depending upon your info, if all you know is last year's fixed assets and this year's fixed assets. For example, let's look at this was Apple, right? Let's look at the balance sheet. Just gonna look at the annual.